I got 6 of the biggest mistakes investors make. The whole point of showing this to you is to basically prevent you from losing a whole bunch of money. So here are examples. Examples of investments I see people make where they've been wiped out. Limited partnerships, hedge funds, startup investments, real estate partnerships. Even though I like real estate, I'm personally not a big fan of real estate limited partnerships. What I have learned growing up in the investment business is this. A lot of stuff gets packaged up and sold to retail investors, and by the time it is sold to you and I as a retail investor, it is garbage. Because the commissions and the fees, everybody's making money but the retail investor. So how do you prevent yourself from losing money in these investments? And here's how you prevent it. The question you always ask yourself, who's ever selling you that investment, is the investment liquid? Can I sell that investment? And like everything I showed you today, although the robo-advisors, for example, you build a portfolio of diversified mutual funds, ETFs, stocks, bonds, all that stuff. The longest it's going to take you to get your money back, 5 days. You can put in a sale, they're going to sell the trade, and they're going to get you a check, and you're going to have your money back in 5 days. You buy a home, you're not getting your money out in 5 days, but it's liquid. Unless you buy in a really bad market and you price your home really wrong, you're at least getting your money back within a year. In most cases, you're selling your home, you're getting out of your real estate within 120 days. Okay, so that's liquid. Most packaged products are not liquid. Unless you are worth in excess of $10 million, you should never be considering hedge funds. Okay? Limited partnerships, I would avoid these like the plague in most cases. Startup investments. Okay, so I talked about how I've invested in startup companies. But I don't want to be super, there's all this stuff going on. I see all this online marketing, and I even know some of these people who do this online marketing. Some of these people are really loved and really respected, and one of these people right now is talking about, I have to be careful because I don't want to like get anybody in trouble here, but a lot of promotion around this idea that there's a secret way into these startup companies. You're going to invest in the next Facebook. You're going to invest in the next Airbnb. You're going to invest in the next Create It Live. And you want to know the truth? The chances are that you're not. Okay, if you're not a professional investor with a whole lot of money, these private equity firms and these VC firms, they go out and they invest in 50 companies or 75 companies or 100 companies. They know they're going to lose money on most of their investments. You as an individual investor, you need to be, you're not going to buy 1 or 2 companies. You need to buy 10, 15, 20 of these companies. And the problem is that today it is easy to invest in startup companies. And there's all kinds of crowdsourcing websites. I could give you 20 crowdsourcing websites right now where you can invest in the next hot startup. And here's what I can tell you. For most of those investments, that ends really badly. So the amount of money that you should put, if you're going to have money in these kind of risky investments, no more than 5% of your net worth to 10% total. So if you have $500,000 and you want to play this game, then you say, okay, I'm going to take 50 grand and I'm going to divide that up among 10 investments. That's $5,000 in investment. Does that make sense? Okay, so mistake number 2, investing more than 5 to 10% of your money in one asset or money manager. So I see people put all their money with one money manager. They pick out one mutual fund. Let me go back to that Vanguard Star Fund. Okay, because I told you I love that one fund. I talked about target date mutual funds. There's 11 funds in that one fund. So it might be one investment, but there's 11 separate asset classes. You might be able to buy one mutual fund and have 15,000 separate investments inside that one fund. Don't put all your eggs in one basket. Mistake number 3, investing on margin. Anybody here know what margin is?
Basically leverage, right?
So margin is basically you've got a brokerage account and you can borrow against it and keep investing. So you could have $100,000 in a brokerage account, and the brokerage firm will loan you another $100,000. And so they'll loan it to you. It depends on how much money you have and what kind of a client you are, but they'll charge you 8%, as low as 1.5%, depending on the brokerage firm. Some of these brokerage firms even market to this. They'll say, you can borrow 1.5%, and you can go and buy a dividend-producing stock at 2.5%, and then you can make the spread. You can make 1%. Great, unless the stock goes down, unless the market corrects. Happens to be, we're at an all-time high in the stock market, and no surprise, there's more money on margin right now than there's ever been in my lifetime, which starts to tell you that the market is getting maybe a little bit frothy. So don't ever invest on margin. My family, the Bach Group, when I left, we had over $700 million under management. My sister manages it today, over $1 billion. We had no clients on margin. Just don't ever let an advisor convince you to do that. Number 4, loaning money to people that a bank won't loan money to. So by the time someone comes to you to borrow money, everybody else said no, right? So if someone's got a business and they're like, hey, I'm doing a convertible note. I've invested in convertible notes, but I'm investing it with my percentage, and I know what I'm doing. By the time the average person, someone comes to you and says, hey, I want to borrow $100,000, I'll give you 10%. You're like, 10%? My God, David showed me the numbers. If I can get 10%, that's great. It's guaranteed until they stop paying you, and then they don't pay you back. Don't loan money to someone that a bank won't loan money to. You're not in the banking business. It always ends badly. How many of you know someone who loaned money and then didn't get it back? Anybody know anybody personally? Yeah. Mistake number 5, signing a personal guarantee on business debt or leases. So this one's tricky, right? Because when you go to borrow money, and you have a business, in most cases, especially if it's a smaller business, they're going to make you do a personal guarantee. You need to really think through what you just signed up for. And it's everything, right? That's the lease, like you go lease office space, you go lease furniture, all of that. If you sign a personal guarantee, first of all, if you can avoid signing a personal guarantee, never sign a personal guarantee. And the most important thing when you sign up for anything that is a personal guarantee, don't look at the month, look at the lifetime of the loan. So I see people start businesses. A friend of mine just recently was going to start a business. And so she took the space for the business. Even though I said to her, look, you got to run all the numbers. Let me see the spreadsheets. Show me your expected cash flow. She came back and told me what the rent was going to be. I'm like, it's just not going to, I just know the math's not going to work. You're about to take on a rent that is so high, you won't be able to possibly make money on this business. It could take you years. She's like, no, it'll definitely work. I'm really confident. I know this is a great location. So she does the lease. I'm like, the moment you sign this lease, you've just personally guaranteed, you just personally put yourself on the hook for $750,000. It's a $750,000 liability. She's like, what do you mean? I'm like, you're signing a 10-year lease. That's a $750,000 liability. So she gets the typical deal, free months. I think they give her 6 months of free rent. Starts having problems with the business. Ultimately had to walk away from that lease and get somebody else to take the lease over. She was lucky that she could, because she was on the hook for $750,000 in lease payments. So be very careful. Mistake number 6, not signing your own checks. I don't care how successful your business is. I don't care how busy you are. Always sign your own checks. It's like the one rule that never goes away. Somebody else can cut the check. My bookkeeper cuts the checks, puts them in front of me. I go through them. I check it off. The invoice is attached to the check. Then I sign the checks. The truth is I do most of my banking online at this point, so I'm signing less checks. But every time somebody gets ripped off, it is because they let somebody else sign their checks. And every time you hear about celebrities that have been scammed is because they hired a money manager or a financial management team, and those guys signed their checks. I think it was, who did I just read about?
Oh, yeah,
Alana Morissette, Lana Morissette,
yes.
right? She's on the cover. It was on the cover of Yahoo last week that she was suing for $4.9 million or something.
Yes.
Right? You saw that? How do you say her name again?
Alanis Morissette.
Alanis Morissette. Yeah. I mean, those stories happen all the time, and sure enough, she's not signing her own checks. Okay, so those were the 6 biggest mistakes people make. Don't go make them.